Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody. Let's take a look again on the gold market. So yesterday we have discussed in details the new environment that stands on the market, the common view among the investors that inflationary pressure and the fears of the inflation has stepped out a bit, and recent data and overall anticipation on inflation, and that has resulted in the decreasing of the interest rates and drop in the United States dollar. And yesterday we talked a lot about the bullish cycle of the global cycle of the economy, United States in particular, and that everything corresponds to our long-term view that dollar has to hit the new lows around 87 area before the major trend will turn and before the real growth or recovery stage of the cycle starts. And gold actually also enjoys with this new environment because it mostly stands supportive and suggests that within the couple of months gold has chance to proceed higher. I don't know whether the market will return back to the top of the 2000. This is also possible, but currently we do not have the obvious signs that this definitely will happen. The one thing that we could say is that probably market will try to creep higher, and the target that we could estimate currently, more or less definitely, is it stands around 1850 resistance. So for a short-term trading, we have actually all information that we need on a daily chart. So in fact, we have few targets to consider. First of all, you can see that the price action inside of consolidation on the flag pattern on the weekly chart on the daily looks like the double bottom pattern. And using the classic approach to estimate the target of the double bottom, you need to calculate the height of the double bottom pattern from the bottom to the neckline and count it to the upside. And you can see the target around the next conference resistance of the 1828 and 1850. Somewhere close to the 1835 and 1840. That will be the target that we currently could calculate and set it surely. So, based on the recent action. At the same time, before market will be able to reach it, you could see that we have strong resistance area slightly above the market. The market already is testing a lower border. You can see that we have conference of the 1784, 1799. And another target that we could consider is XOP based on the same ABCD pattern. OP was pullback, XOP. It's around 1805, slightly above the conference, and is accompanied by the daily overbought as well. So that's actually the area and the target where market is tending to. Market currently stands in an extension mode. Because the reaction to contraction mode retracement on the OP target already is done. So you can see extension, contraction, extension, hitting the OP contraction, now again an extension. With this upper leg, extension leg actually has the few features that led us to set invalidation points for a current setup. Market should not show any deep retracement and especially return back to the bottom, because that will be inconsistent with the overall market mechanics and how in the overall rules, inner rules, the natural rules, how price should move. So once the major retracement already is done, there should not be in any another major retracement. As minor pullback, technical pullbacks are possible, some predefined fib levels, but not major reversal returning back to the lows. That's an important moment. Second, while it's also should not happen, because In this case, market will form, first of all, bearish reversal swing if it will drop below the recent lows. And second, market returns back in the consolidation, which led us to treat the breakout as the fake. And that will point that market is returning back to the lows, or even we could suggest the downside breakout, opposite breakout of this consolidation. That's why, as an invalidation point, we could set the lows of our reversal candle, we discussed in the beginning of the week, that stands around 1723, 1725. That's the, let's call it, crucial area. So, it means the single conclusion that we could make in the current situation. As market stands in extension, and it should make only minor pullbacks, it means that we should keep an eye on the possible chance to get the long position here with the moving higher to the XOP after the minor retracement. That's the major strategy that we intend to consider. On the following time frame chart, you could see that price completed our 1618 butterfly target as well. Overall upward direction looks relatively strong, so this is a good sign. Once the target of the butterfly is completed, it suggests at least a 30% retracement. This is the minimum target of the butterfly, minimum respect of the market to the target. And also don't forget that market stands at the confluence. Currently it hits the first level, 1784. So we have the target and we have the 1784 fib level, which means that pullback is very probable. Here we consider, for taking a long position, we could consider two levels. First one is 1755, 1760, and just because this is first fib support and the target of the butterfly, minimum target of the butterfly. Second, because this is the upper border of the daily consolidation. So you can see this is the neckline of the double bottom. And if market indeed stands bullish, I would suggest that this is most probable level where market should return back to the upside action. But additionally, we also have another level, slightly deeper, stands around 1743 and 1746 confluence support. This is the vital area for short-term setup. It also acceptable for taking the long position. So as I said, we have two levels. First one is here, the second is here. But at the same time, this is a kind of the indicator. So this is also vital level in a row with the 1723 lows. Why? Because, well, the breakout of the confluence that stands already inside the previously broken to the upside consolidation, it will be irrational for the bullish market. So first of all, market, if it stands bullish, actually it should not return back even to in consolidation at all. But if even it returns back in the consolidation, it should not break any confluence that stands very close. In the case of the both events will happen, that will be the clear sign that something is broken with the bullish context. And 1723 is a nominal confirmation of the reversal, but real reversal will happen when the market breaks this confluence. That's why this is an area that we also could use for replacing the stop order, because breaking of this level automatically will mean that this level probably will be broken. And all the stuff suggests that markets return back to the bottom. So that creates the clear trading plan for us. We consider taking long position here and here with the stops below this confluence, and approximately we are aimed on the target around 18 even, 1805. Market should struggle with this confluence area, trying to complete the XOP. Potentially, with the perspective of this or next week, we also consider 1850 area. So also we have it in mind, just because this is the target of this looking like double bottom pattern. So these two targets that we could set, but this is not very important to us right now since it stands above the daily overbought. It's more important the target that we could achieve within the next week.